Good morning, everybody. It is December 27th. Hope everyone had an awesome holiday and is rested and ready to get back to work and get ready for 2023. Crazy to think that the year has come and gone. But let's get into our plan of attack for today for trading SPX, 0 days to expiration, options, and ES futures. All right, so first things first. Well, today or every day, I look at the economic calendar using Forex Factory, and you see there's nothing important coming out today. Let's look for the rest of the week. I don't anticipate there being anything because you still have to understand it's a holiday week pretty much. Most of the activity I expected to be low volume. I don't expect it to have a whole lot of fall through as far as direction goes, really. And kind of expect choppiness. Could be wrong. It is a different type of year or a different market condition. But that being said, just be prepared for each one. Now let's go ahead and talk about some of the trade setup. What are we looking at? All right, so the ES futures. Just quick recap if you're unfamiliar. For those that are new to this, we have this trend line coming down, right? Trend line coming down, rallied up to resistance, and we failed. Came right back down to support, which is this gray line right here. This is support. That's where our price is bouncing, and now we're right back up into resistance. It's up a little higher. That's not a very straight line, but you get what I'm saying, right? So basically, resistance on the ES is basically 39.15. I'll zoom in on that too. Let me fix this. Here we go. All right, so as far as today goes, I actually like the idea of doing a call credit spread or trading futures to the short side, mainly being so support did hold. We did rally up to support or resistance here, got smacked right back down, and now we're kind of drifting higher up into resistance. There's also moving average resistance. There's just a lot of headwinds ahead of us, right? Above us. So I expect the path of least resistance to be to the downside, but I also like with the drama free version, I also don't expect it to, I don't need it to completely just, it could go against me slowly, basically, is what I'm getting at. Because there is the 50-day SMA right here at 39.04, and a bunch of other moving averages along the way. And basically, you have to ask yourself is, do we think the day is going to end like this? Which, I mean, it could, but we just have to kind of forecast what we expect today to look at. Me personally, I kind of think today may just look like this. Maybe like just a little bitty candle with not a whole lot of action. Could be wrong, but that's kind of what I'm looking at now. As far as the daily time frame goes, but let's pull up our quickest chart and go over our plan. There it is. Okay. So my plan today. So let's go ahead and look at it from a big picture perspective. All right, where we looked at the daily chart, you can notice a high compression squeeze on the 30-minute time frame. Those typically fire to the downside, typically. It doesn't mean it can't go up, but typically it fires to the downside. It is sitting right at the daily 8 EMA, and the shaded area is that resistance level that I was talking about. So we're right into that resistance, and here is the daily 21 EMA right up here. So, and then it is starting to have rotation, right? The candles start turning red, starting to get dots, meaning rotation that we'll call it the spaghetti is starting to go lower. All right, so now we'll go to the 5-minute. There we're in here. Boom. Okay. So, quick recap if you're unaware of how to do this. So here are the third ATRs on the hourly time frame. I usually, well, it's not usually, but I do take them from here to here, or from here to here, or I'll play the extension back in. That's pretty much, we'll call it my left and right lateral limits and how I plan to trade them. But as far as today goes, what I'm looking to do is if this continues to go short, the squeeze does start to fire to the downside on a 30-minute time frame as we are up against resistance. If we could break below VWAP in the 20-minute 1 EMA, I would like the rally to occur within about the first hour or so. and then throw on a call credit spread against those sell signals that may appear. That ideally is the way I would like to take it because of the larger time frame has all those, like I mentioned, the moving average resistance overhead, and there's also price resistance and things of that nature. But what if price decides to go to the upside? Okay, cool. I can play the upside as well. So say this trend as things continue to move up. I personally don't really want to go long until it does push up, and we'll say a breakout to the upside and a pullback to VWAP, and then I'll play that to the upside and keep a tighter leash on it and do an out of the money put credit spread on it. But that's kind of it. I know it seems like lately I've been saying sell rallies and buy dips, but that's kind of what's going on right now. And so, yeah, that's really fun. I personally, because of the daily chart, I would like a flush lower, rally, sell signals, and then take it down. But if the market does decide to break out, say the infamous Santa rally does come out or come out to play or whatever you whatever you want to word it, I would like to see a push up. And I think, and quite honestly, I think it's going to have to clear 39.15 first. No, that's not 39.15. And why 39.15? Well, 39.15 is this resistance level right here. And so if you're wondering where I'm pulling 39.15 from, is you can see it's this pivot low. Show line across. You can see that's right where it stopped. So that's something worth noting there. If price rallies up to here, let's see, 39.15. Let's see where that's at on the quick hits chart. All the way up here. So let me actually activate. Let's move this over. About 39.15. Close enough. All right. But if price does do this, say price does rally up to here, and then we get sell signals, I'll consider throwing on a call credit spread up here, looking for the push lower, the reversion. And why that is because that is overhead resistance, and it's right by the 21 EMA as well. We typically don't just blast right through it, but that's the plays I'm looking at doing. I have a hard time getting long at this level based off of the daily perspective and the technical analysis that is unfolding in front of us. But so those are the two main things. So actually, I probably will just wait for the flush rally and then short it down, or I'll wait for the ramp up and then maybe get sell signals up here, then sell a call credit spread on it. But we'll see. I'll let it unfold in front of me and make the decision then. But that's all I have for y'all. Hope y'all have an awesome day and awesome start to your weekend. And yeah, I guess that's all I have. Have a great day, everybody, and I'll see y'all again tomorrow.